Hello everyone, welcome to the Financial Information channel. In this video I'm going to give you my top 5 stocks during the month of July. Now before we start, remember I do videos about the stock market, how to invest in the stock market, personal finance, and how to make money online. And this video is to give you that information about the companies that are doing really well in the stock market. The decision to either invest or trade the stocks is going to be up to you. And in addition, I added some of the stocks that are really good in the short term. Now let's begin with the video. And the number 5 on the list is going to be Starbucks. Now Starbucks is very popular, and what they do is they sell a lot of coffee or cold beverages. When you go to a store, you can pick up either a coffee or a tea or any cold beverages. In addition, since they wanted to get more revenue for the company, they included a snack section where you can actually get some pastries or some snacks. And the snack section has improved the company revenue in the last few years. But the reason why I chose Starbucks is because at this moment the price is a little bit low. I think it's gonna continue heading higher from now on. I was reading an article that the percentage of regular coffee drinkers have spiked 62%. That's an improvement of 5% over the previous year. Now, I had no idea that the regular coffee consumption was still growing in the United States. In addition, Starbucks opened a new, I would say, luxury coffee retail in Seattle, and the average spending total amount for each customer on those luxury locations are about $20. And one of the main plans for Starbucks is they plan to add about 12,000 stores in the China Asia Pacific. And Asia Pacific is about the third largest coffee maker after Western Europe and North America. And if Starbucks wants to dominate China, they need to implement the functions of selling more teas, because China consumes mostly teas instead of coffee. Now we're going to take a look how Starbucks has performed this year, and Starbucks has gone up about 7 to 8% this year. And I'm going to put on the side the information about the Starbucks. And what I like about Starbucks is that they pay a dividend, and the dividend is actually a good amount. And the dividend that they pay is about $1. And the next time they report earnings is going to be on July 27. Last time they reported earnings, they had a lot of issues with the online transactions. I think they're going to do better this time. And in this screen, we can see the forward PE, which is 24.71. Now the company is huge, so that PE is actually really good. And I'm going to put the short interest, which is 1.67%. And the short interest, what it means is that people that are betting against Starbucks so they can go down in price in the stock market. Now I'm going to put on the screen the income statement for 2016. What they generate in 2016 was 21.3 billion. And after everything was paid, including operating expenses, the net income was 2.8 billion. And the EPS, which is the earnings per share, was $1.90 for 2016. It has increased every single year, so that's a good thing. Now we're going to take a look at the balance sheet, which they have 2.1 billion in cash in the balance sheet. And they have a short-term debt of 404 million, and in long-term debt they have 3.3 billion. What I like about the Starbucks, they do have a good cash flow, so they should be able to pay the debt if they want. Now let's go to the next company. And the next company is Micron Technologies. I'm gonna put the stock symbol as a sound so you can listen. And Micron Technologies, what they do is they have memory chips for either computers, for either mobile devices like cell phones or iPads. Now you gotta keep in mind that this company is one of those companies when the demand is really high, the company is gonna go really high. And at this moment, the company is going in a right direction because it has improved a huge amount during this year. I think it is around the top 3 in the semiconductor companies that has gone a huge amount this year. I would think that this company is more like a short-term company where you can actually trade the stock because the company is very volatile. And it is very similar to AMD in that aspect, because sometimes the company goes up about 2 to 3%, and in a couple of days the company has dropped that amount. So if you can read the charts to see what are the entry and exit points, you can actually make some money trading this stock around. And this year, the company has gone up about 43 to 44% for this year. And the reason, like I mentioned earlier, the demand for memory chips has gone up dramatically. Now I'm gonna put on the screen on the side the stock price so you can get an idea. They're gonna report earnings on June 29, which is in a couple of days. And I think, in my opinion, they're gonna report good EPS and good revenue. However, they need to basically say they're gonna have a good guidance for the remainder of the year. And the company does not pay a dividend. I would not pay attention to the forward P since it depends a lot of the product demand. If the product demand actually slows down, then the price of the stock is gonna drop a huge amount. And I'm gonna put on the screen that the short percentage is around 4.57%. Are we going to take a look at the financials? And the financials in 2016, they had about 12.4 billion in revenue. However, after everything was paid, they had a negative 276 millions, which means they had a negative EPS. And the earnings per share, which is the EPS, was negative 27 cents. So even though that the company was making a lot of money, they were not able to be profitable. And I think this is a huge red flag. Now in the balance sheet, they have 3.8 billions. They have a short-term debt of 756 millions and a long-term debt of 9.2 billion. So I do think that this company is really good in the short term because the company has gone up a huge amount this year and they should be able to pay some of the debt. However, like I said earlier, it depends on the demand, and if the demand is not there, the company is gonna go down a huge amount. And this company for me will be the perfect company to invest in the short term. Now we're going to go to the next company. And the next company is another semiconductor company. The company is called Lam Research. And what they do a lot of tools or equipment that are used to embed the chips into the mobile devices or any computers. Now, this company has a huge potential since the products they help produce, they are connected, for example, to cars, the Internet of Things, machine learning, or virtual reality. And I think those products are gonna dominate in the next few decades. And the company spent around 1.8 billion in research and development so they can actually continue producing more quality products. And yes, the company is in the semiconductor space, so it has moved a huge amount this year. The percentage that they have improved in 2017 is around between 42 to 44% for the year. And I'm gonna put on the screen the information about the stock. And what I like about the company is that the EPS is really low compared to the price. Because the EPS is under 20, so it represents a good value. And the company pays a dividend, and the dividend is around $1.80, and they're gonna report earnings on July. And in this screen we see the forward PE, and the forward PE is $14. So as you can see, the company is not overvalued at this moment, and in the future it's gonna reduce the PE, which is gonna improve the value of the company. Now the short interest for the company is around 5.94%. So it's a little bit high at this moment. However, I believe that at some point this year, the company had over 10% short interest. And because the company had been doing really well in 2017, that percentage had dropped. And in the net revenue for 2016, they had 5.9 billion and the net income was 914 million. And the earnings per share, which is the EPS, they have $5.22 in 2016, which is a really good amount, since the amount has increased dramatically in the last few years. And in short-term debt, they have 949 millions, and in long-term debt, they have 3.6 billion. Now you can see the company has made a huge amount of revenue in the last year, and they have a good balance sheet. Based on the things that the company is involved, I think this company is very safe and it's gonna continue heading higher in the next few years. And now we're gonna go to the next company. The number 2 company is Bazoom. And many people know this company as the Chinese version of Shopify. They have similar products where if you need brand building for the e-commerce or any marketing, they're gonna help you with your business. And in addition, they do a lot of marketing materials for those companies. Keep in mind that many companies are doing their business online, so that's the reason why Shopify and Bazoom have gone up a huge amount during the past year. Now, these companies compare a lot to Shopify. However, there's a huge difference. Shopify at this moment is not being profitable. However, this company is very profitable at this moment. And one of the interesting facts is that this company IPO went a day after Shopify. There's a huge potential for this company because based on an article that I read, it's supposed to have the size of Japan, America, Britain, France, and Germany combined. Now, if that becomes a reality, then the stock price is gonna go really, really high in my opinion. And one of the things that I like about this company is at this moment, Alibaba has around 23% of the shares for this company. So it makes it easier to trust in my opinion, especially when the company is in China. Now, the growth company for this year, for this company, has been anywhere between 88 to 92%. And the question is, if you're really late to join the growth of the company, and in my opinion, I don't think so. And I'm gonna put on the screen the information about the stock. And the stock at this moment has a little over 1 billion in market cap. Now, the company doesn't have a huge market cap, and I think that's where the potential to go even a bigger amount is gonna be realized. They're going to report earnings the first week in August. Now, you can see in this screen, you can see the forward PE of less than 20. And at this moment, the PE which they have for this company is almost 100. And the short interest for this company is 1.71 millions. It doesn't have a percentage at this moment. And in the net income, they had the net revenue of 509 millions. After operating expenses, the net income was 13 millions. And the most important is that the EPS was 24 cents, which was positive in 2016. And in the cash, they have 139 millions, and they don't have a long-term debt, but they do have a short-term debt of about 16 millions. Now, as you can see, the company is very profitable and they have a good balance sheet. Now, keep in mind that this company is very volatile. Back in June, the second time that I was trading the stock around, I received a notification, I believe in June 8th, that the company has moved around 10%. It's going to be on the screen so you can get an idea the percentage that the company moved up on that specific day. And the funny thing is in the next day, the company was around $21. And that might be one of the reasons why you may want to set up your market limits, because that way you can get some profits. I'm going to put on the screen right here where I explain over the stop limits in a video. And in the next week, the company even dropped a bigger amount to around $19. And as you can see, that's the reason why this company is very volatile. So expect to see a lot of up and downs if you plan to keep the stock in your portfolio. And now we're gonna go over the number one stock for the month of July, and that's gonna be Constellation Brands. And the company, what they sell a lot of alcohol beverages. They do sell a lot of beers, vodka, wines. So that's one of the main things that they actually do in the company. Now, this company has been the highest contributor in the United States for the 4th straight year. And one of the main factors is they acquired Ballast Point, which they're in charge of creating IPA beers. And IPA beers are high quality beers. Now, in the last quarter, they reported they had around 7.3 billion net sales. That was about 12% increase over the previous year. And most of the sales came from beers, which it was around 58%. And one of the things, they're opening a new plant right in the border of Mexico, where they're gonna help them create more glass beer. And that plant is going to help the company create about 50% of the glass beers. Now, this company is gonna report earnings soon, and the reason why I mentioned is because this company has beat the EPS and revenue for the last 10 quarters. And the company has two things. First, it has a great distribution system and a great cash flow. And the company for this year has gone up around 18 to 20%. And the reason is this company is very stable. It's gonna have anywhere between 15 to 20% growth every year, which is really good. And I'm gonna put on the screen the information about the stock. And what I like about this stock is the PE ratio is under $25, and the company pays a dividend which is $2.08. It is about 1.13% dividend yield. However, the dividend yield tends to move up or down depending on how the stock price moves. And the other thing to pay attention is they report earnings on June 29 which is very soon. And now we're going to take a look at the forward PE, and the forward PE is 21, which is really good for this company. Now, considering the price at this moment for this company, I think it's a little bit undervalued, and they have a short percentage of 2.23%. And now we're going to take a look at the financials. The financial, they have 7.3 billions in net revenue, and the net income was 1.5 billions, which is really good for this company. And the EPS was $7.52. I like this company because this company has a high growth margins on the products. And now we're going to take a look at the balance sheet, which at this moment they have 177 millions, and the short-term debt of 1.5 billions, and the long-term debt of 7.7 billions. So the balance sheet is one of the weaknesses of this company because it doesn't have a lot of either cash and it has a lot of debt, but they do have an excellent cash flow. The cash flow grew about 51% to 789 millions, and that was at the end of February 2017. And I think that the cash flow is very underrated. If the company is able to manage the revenue they generate, they should be fine, in my opinion. And keep in mind, this is just an informational video about the stock market. You can actually make your own choice to either buy the stocks or trade those specific stocks. Well, that is gonna be everything for the video. Please leave in the comment sections below what was your favorite stock mentioned in this video. And if you haven't, you can actually subscribe to the financial information channel. I usually bring videos about the stock market, personal finance, and how to make money online. And I want to thank you once again for watching this video. Have an excellent day and take care, my friends.